Welcome to another Navia Freight Market Update. This is for the month of February 2026. During these updates, we try to give you freight information that will help you make better, smarter supply chain decisions. We will be talking with our team members from all over the globe about sea and air freight markets. Let's go. Welcome, Dave. Thank you for joining us for another freight market update. Just wanted to start off by talking about capacity. Obviously, coming into Chinese New Year, there's always a little bit of a shrink in capacity out of China. What's it looking like on your end?
So what we're seeing today, Greg, is that carriers are announcing significant numbers of blank sailings going into week 8 and week 9, which is really kind of covering that Chinese New Year period. And the reason they're doing this, not only for Chinese New Year, but the demand leading up to Chinese New Year this year was drastically short of where it typically is from a historical perspective. So carriers are doing what they can to try to eliminate that capacity from the market, and we expect that post Chinese New Year, it'll take several weeks for the rotations to kind of come back into normal. So we are expecting some pretty significant roll pools that are being built up in Southeast Asia. So once those blank sailings come back into the market, it'll take a few weeks to kind of work through that backload.
Right. So I guess that leads nicely into the next question I was going to ask is how does capacity match demand? And it sounds like demand is way lower and there's generally ample supply, hence the use of those blank sailings. Am I correct in saying that?
Yes, sir, absolutely. We're seeing, I think the expectation is that overall, looking at the amount of capacity that is expected to be introduced into the global market this year, it's about 5% growth year over year. And like we talked about previously, from a North America Transpacific eastbound market perspective, we are expecting about a 10% decline in year-over-year import volumes through April of this year.
Yeah, and then what's the impact you expect on rates? What are we looking at over the next couple of weeks, for rates?
So rates continue to deteriorate and decline. So now the carriers have basically extended rates to the end of February 28th. Even with that extension from February 1st, or even the end of January, we are still seeing some continued reduction over the current limits. And we expect that may continue over the next week or so leading up to CNY. Now, post CNY, what we do expect to see are carriers at least announcing some pretty significant GRIs for March 1st and March 15th. Again, that's primarily to try to escalate or increase that FAK rate to a more compensatory level and to give them additional leverage for the beginning of the contract negotiations with BCO and NVOCCs beginning in March. Now, we have no indication as to whether or not those GRIs will stick, at least the fully announced amount. But we do expect those announcements to happen and at least the carriers to try to get a full implementation of those going into March.
Now, I guess just more on a general basis, any notes, if I'm a supply chain manager watching this, anything I need to be aware of or think about coming into the next month?
So from a Transpacific eastbound perspective, we are just going to be starting to move into the contract season. So any importers that have the volume where they're looking to negotiate named account pricing for the next contract year, some of the feedback that we're receiving is that we do expect rates to be lower than the 2025-2026 contract year. So that is truly a positive, and that usually does drive the initial FAK market. And again, the longer term forecast for the U.S. on an import perspective are weak. And so it should be more of an importer market, at least pending any geopolitical or other issue that may transpire in the market.
Awesome. So I guess on a procurement perspective, if you're an importer, it looks somewhat promising, although demand is generally a little bit lower. Thank you for your insights there, Dave. Really appreciate that. and we will see you next time.
Thanks so much, Greg. Appreciate it.
Welcome, Giannis. Thank you for joining us today. Let's get stuck into it for the Australian freight market. Talk to me about the capacity at the moment leading into Chinese New Year.
Hi, Greg. Yeah, it's been a bizarre pre-Chinese New Year season, I would say, mainly because it seems that capacity was too much. As such, although we were expecting the FAK/spot rates to go up out of Asia and especially out of Northeast Asia and China, that didn't materialize. On the contrary, we have seen the rates going significantly down. And just looking at the numbers, it is mainly related with capacity being in excess. There were some extra loaders from a couple of carriers, and that didn't allow the rates to go up as we would usually expect during a pre-Chinese New Year season.
I still imagine it would not be a green, so we're looking at yellow-orange.
That is correct. In our traffic light system, we would go with yellow.
Okay, so book 3 weeks in advance, more or less, at the moment.
Exactly, yes.
Now, I just want to touch on the European market. Obviously, we're seeing some adverse weather in that region. What's it looking like out of Europe into Australia and New Zealand?
As expected, we are in winter season in Europe. As such, congestion and delays have been starting to ramp up, especially around northwestern Europe, mainly because of some severe weather conditions. This is expected to have a cascade effect and a knock-on effect for the next couple of weeks. So unfortunately, it seems that congestion is not going away in the main, at least, North European hubs. So we should continue and add a couple of days as buffer for every cargo that is coming out of Europe into Australia.
Beautiful. Now, finally, I just want to touch on the, overall landscape of the freight market. Any other geopolitical factors, Red Sea, anything like this that we need to be aware of as supply chain managers?
The Red Sea situation will continue to be unstable. We have seen carriers deciding to go via the Suez Canal, then changing course, some others who are more aggressive than others. It's going to be pretty much on a week-by-week basis. We have seen the last couple of days, for example, Maersk and Hapag have just announced that they are going to start having some services out of Suez Canal. So it's just something that we need to continue and keep an eye on. At the same time, we've seen some trade agreements happening between Europe and India, which will most probably impact, not right away, but obviously over the next couple of years, the volumes on that corridor. For Australia, unfortunately, yesterday we have seen the RBA increasing the interest rates, and that might play a negative role in regards to demand, but this is more of a wait and see approach. Generally speaking, we expect a similar year compared to 2025, especially out of Asia into Oceania.
Amazing. Thank you, Giannis. Really appreciate your insights as always, and we will talk to you next time.
Thanks, Greg.
Welcome, Alana. Thank you for joining us for our February market updates. Let's start off with the air freight market capacity and space. What's that looking like at the moment? And how's it going to track over the next month or so?
Thanks, Greg. So February, we typically see a bit of a spike because of Chinese New Year in the air freight market.
Yep.
And that's down to suppliers closing and obviously them wanting to move freight out of their warehouse before the break.
Yep.
So prior to the break and afterwards, we typically see a peak in air freight, and we will see rates rise and space constraints. We typically tell forwarders to have their shippers release to us, and we aim to uplift out of China during the Chinese New Year's period. That typically means cheaper rates and more space available rather than trying to rush it out before or afterwards as well.
Okay, so release to us and then uplift actually during the trough, the low period in between. Okay. Cool.
Yeah, that's correct. So a lot of shippers will try and push uplift prior, but there really is no need. I mean, if you've got a week lead time like that, you're paying premium prices for no real benefit when you can hold a couple of extra days and we can arrange it while the market's soft.
Awesome. That's very good advice. And I guess on the flip side then, would that mean that demand over the next month, you'd see a peak before and after Chinese New Year as well?
Yeah, that's correct. So we typically see suppliers pushing for uplifts, but if you can control the situation and tell them to slow down, if they release it to us, we'll generally find the best spot in the market when the low hits and avoid those peaks before and afterwards.
Love it. What about general market conditions, just more broadly? You know, obviously that's China. More broadly, are there any geopolitical factors, congestion that we need to be aware of, or generally pretty clear?
I think the main thing that's affecting the market at the moment is the weather over in the US. Obviously around the Chicago area, we're seeing quite a few weather delays. Airlines are not cancelling as many flights as we thought, but the risk there is we're having cargo arriving and warehouses aren't opening, or the trucking is a lot slower because of the weather conditions on the road. So that's probably something to be mindful of if your receiving party is actually open during this period, or do we need to move it back into storage facilities, which is what we're doing for a couple of our clients who can't actually stop the flow of their freight. We're having to take it back into our own facility until receivers are open. So that's probably the biggest thing that's affecting the market at the moment, is the weather conditions over there. Out of Australia, we're actually seeing a lot more services come back into the market, which is nice. We're nearing pre-COVID levels of flights. So that's quite nice to see, particularly down in Melbourne and Adelaide. We obviously have a lot of fresh product moving out of there, so there's been more services put on. But even up in Brisbane, we're seeing Air New Zealand come back. Cathay Pacific's putting on more flights, so gateways to Europe and things like that are coming back online. So the market's looking really good out of Australia for the next month, and obviously that leads into a trend over the whole of 2026. So I think it'll be a lot easier, and rates will obviously ease as well with more services coming back into the market. So good news for exporters.
Awesome. Good to hear. Thanks for that, Alana. Always insightful, and we will see you next month.
No problems. Thanks, Greg.